What is up, everybody? Good morning. We are live on a brand new show here on Benzinga. We are going to be doing an early morning market watch with my buddy, the Stop Hunter, Stephen Hode here. So if you guys watch Benzinga live, you know Stephen coming over he's joining us live from England. Stephen, how are you doing this morning?
I'm doing very well, thank you, Aaron. Yeah, it's a good sunny day over this side of the pond, and yeah, trading's
Beautiful. I love to hear it. I hope we follow suit over here. Before we get started, so for people who are joining us, maybe in the audience who may not be familiar with you, do you want to give yourself just kind of a brief introduction? Tell us what you've done, maybe before in your career and what you're doing now.
Yeah, sure. Yeah, I suppose you could call me a veteran of the trading world. Started in the mid-90s in Merrill Lynch, fixed income, and worked my way around a few other banks, German, Japanese, in equities and complex derivative type products. Spent a huge amount of time, though, a company called Coke, KOCH, not the drinks company. You've probably heard of them. Charles Koch and his commodity gang, trading, energy, metals, coming up with the strategy designs, just doing all sorts of really interesting things in that space. Did well enough that allowed me to retire in my late 30s, and then people just banged on my door, can you help me trade? So I decided to set up the Stop Hunter, which is a company which teaches people how to trade. We've got a YouTube channel, and I run a fund and do all sorts of like guest speaking, teach technical analysis. So I'm over this side of the water, one of the sort of lecturers for the professional examinations in technical analysis. Specialise in Japanese charts and that sort of thing. So call it a post-retirement, really busy period, busier than ever, running this business. And now, on Benzinga TV. So, yeah, here I am. 20 years later.
You're Stephen. So you're one of the few people that seems to almost be more busy in retirement than you are when you were working. So, but yeah, I mean, I think that's some great. For us, it's very complimentary because we do a lot of technical analysis on the show, but because you are very focused, do a lot of equity and stock charts as well, but because you have this experience with commodities, with Forex, I think that'll work out really well because right now on our channel here on Benzinga, we typically don't have a lot of Forex or commodity charts. So I think that's certainly something that our audience will be interested in seeing you talk about, as well, of course, as the equities. Because I mean, right now, we're so US focused here, as I'm sure you aware that like a lot of the world is, especially here in the United States. It seems like, I'm almost never looking at international stock markets or how different stocks are doing. So I think between the international equities, the commodities, and the Forex, you're hitting a lot of areas that we currently don't have a lot of content on.
Yeah, exactly. I'm going to bring you, what's been going on in the morning over here, the Far East, Europe, which, has a big impact on the start of the US day. We get the stories beforehand, so I'm just going to bundle it all up and throw it at you first thing in the morning, with that first cup of coffee of the day, and get you going for that trading day.
Beautiful. All right, well, Stephen, I'm going to go ahead and pop up your charts and let you start running through some things. I'll be hanging out backstage. If you need anything, just let me know.
Will do. Yeah, thanks, Aaron.
Of course.
Well, hello, everybody, and thanks for joining me this morning. Good morning, America, and the rest of the world, wherever you're watching from. Now, I noticed in the US that you've lost one UK presenter, James Gordon, on the Late Late Show, and you've now got another UK presenter on Benzinga TV. So hopefully this is going to be a start of something good, and I'm going to bring you all the news and content from around the world to, like I said just a minute ago, to get you going for the rest of the day. Now, what has been going on? Well, just going to take you through some of the news stories. JP Morgan taking over First Republic Bank for about $10.6 billion. And, still the banking financial woes simmering under the sheets, still, not gone away just yet. And over here in Europe and in China, we've had our May Day, Labor Day. So yesterday, a lot of volume and volatility out in the market because of the absence of, I said, those countries. Actually, China are on holiday until Thursday, so a lot of the flow from there goes quiet, and I can put some spikes into markets, different instruments that normally have that flow in there. What else? Well, we had Australia come out this morning with an interest rate rise, which was a shock. Went up 0.25%, which was totally unexpected, and that jolted the Australian dollar. If you're into FX trading, made it a lot stronger and is pushing up even further. We'll look at a chart on that in a moment. And we also had euro inflation figures out, and really they remained high. We're talking countries like Germany, France, high, but not going higher. So sort of starting to stall, and maybe that's what we're starting to see, maybe a pullback there in the US as well. But the big, I suppose, underlying theme at the moment is the US interest rate rise on Wednesday. And as you can see from the chart, looking more and more likely. It was at 80% last week. You can see the big bar there, 94.2% at the moment. So looking like it's going to happen. The rest of the world likes to hang on the US markets and see where it's going, takes its lead, and hopefully this could be one of the last interest rate rises for a while. And if we go into FX, I'm going to just pull up a really scribbly line chart here, but what this is the currency strength of the major currencies, and we're looking over the last few weeks of data just to see how they've been performing. And what you can notice, this red line here, Japanese yen, really has tanked over the last week or so. A lot of government manipulation in the yen there, so you have to always be careful if you're trading that. We've seen a recovery in the New Zealand dollar up the top, and we're talking about that spike this morning, the yellow line there, the Australian dollar on that interest rate announcement. And we can see the US, the green line there, sitting reasonably flat at the moment, looking pretty neutral after quite a bullish up run for a big part last year, now gone a lot flatter. So if you're looking to put currency pairs together, then at the moment, Japanese yen, New Zealand dollar, Japanese yen, Australian dollar, maybe even the US dollar and Japanese yen, and selling that Japanese weakness. And jumping into commodities, we're going to start with crude oil, one of my favorite markets back in the day when I was at Coke. And at the moment, it's, to me, very neutral. We've got this range bound area at the moment between 71 and 83. You can see the price has been pulling back. This is a daily chart for last couple of weeks. Now I back this up with some other data, and down the bottom we've got something called the OVX volatility, similar to the VIX what you get on the S&P 500. At the moment, neutral. It did pop up above. If it gets upwards, bring more fear to the market, and we expect the price to be more likely to come down. But at the moment, sitting, like I say, pretty neutral. Seasonality over on the left there, this time of year, reasonably bullish. And more importantly, I like to use this commitment of traders data, the large speculators, large commercials. Now, large speculators you'll expect to be moving in line with the price, and the large commercials the inverse. At the moment, well, we can actually see that that has just started to fall off, and these get updated on Friday, so watch that space. But it's now starting to show more bearish signs from the COT data. I'd say overall it's still bullish, but we're just starting to get a bit of a pullback. I want to see those large commercials also starting to move up. And another popular market at the moment, talked about a lot because of the high gas prices that we've been paying over the last few years, and it's the same all over the world. Nat gas futures in the US, you can see it has gone really dead, the market at the moment. We've had this big pull off in the price, and like you say, it's just trailing around the $2.25 area. There's a lot of storage in the nat gas facilities. Plus, there hasn't been any really unusual weather over in the US to, allow for a spark. It's a forward-looking market. It anticipates what's likely to happen. And at the moment, it's very dull and flat. So not a very exciting futures market to be trading at the moment. I just wanted to throw you just a few other commodities that I like to look at for various reasons. Gold, been a lot of talk about gold, especially when the world is feeling a bit more troubled, geopolitically, wars, that sort of stuff. The price has tried to get up through the 2000, but it just can't hold it at the moment, and it's gone into this sort of wedge pattern that we're seeing at the moment. So I'd call that a 50-50 type play for where it's going next. If you were following the strict rules of technical analysis, you might call that the a flag pennant type pattern, and you'd expect it in terms of odds to be pushing more up to 2130, 2150 sorts of area. But there's a whole load of factors that go into the price of gold, and that could easily start looking down 1950, even down to the early 1900s, that 38.2 Fibonacci line. Moving into the middle chart there, wheat. I try to find some strong or weak commodities, and wheat caught my eye, really pulling back. It had this range area between 655 and 711, and has just recently last week broken down, coming to this support around 614, 615, looking to take it even further down to the 560 area. Now, final commodity, copper over here. The red metal goes into just about everything you can think of, industrial wise, technology wise. So really important metal. China hoover up 50-60% of this stuff, so it's also a good bellwether of Chinese economic performance. And as you can see, it hasn't been very exciting, I'm afraid. It's been in this reducing wedge type pattern, really stale and stagnant, undecided where it's going next. But look for a breakout under 3.85 or above sort of the 4.1, 4.12 area. So that's my look at let's say that commodity world. Now let's quickly jump into stocks. Now over in the UK today, this morning, we had some good earnings results from HSBC and BP. BP, the oil company, actually sent the price down about 5%, and HSBC up nearly 6%. And looking at the pre-market movers in the US at the moment, those two feature up as well, because you can trade them in the US. But just looking at the table at the moment, other big movers before the bell: Arista Networks down just over 9%, Uber up just over 8%, Zebra Technologies minus 6%. I'm looking at stocks over a market cap of 10 billion to take out some of the noise. NXPI, that we saw yesterday with their earnings, up nearly 5% before the bell. So that's an interesting one as well. There was a few good stocks out yesterday in terms of earnings. Norwegian Cruise Lines and Vertex, a couple that I've been tracking, posting pretty reasonable earnings results. And today, what have we got in terms of earnings? Well, if we again have a look at charts, I've picked on three in particular. We got Pfizer, Advanced Micro Devices, AMD, and Starbucks. Now, Pfizer's before the bell, and AMD and Starbucks after the bell, and got these 3-hour charts in front of you. And what I've done here is I've overlaid the straddle, the next expiration straddle option for the individual market here, just to give you an idea of what the market is anticipating the move, because you can work out an anticipated move from taking the cost of the straddle and dividing that into the stock price, and gives you a percentage range. So in terms of Pfizer, we're looking at a nearly plus minus 4% move over the the rest of the week, taking you up to $41 or down to the late 37s. Advanced Micro Devices in the middle there got a bit more volatility attached to it, plus minus 7.7%, so nearly 8% in either direction. So we could over the next few days see it as high as $96, $97 or as low as sort of the early 80s. And then finally there on the right hand side we've got Starbucks, again plus minus 4.7%, again taking us up to 120 and down to 109 in a sort of a range. So always useful to have a look at the money straddle positions around earnings times to give you a range of expectation of where the market thinks that price might be heading. Especially if you're trading the straddles, you can work out whether it's got any value in the trade to make it worthwhile putting on, or inversely sell the straddle if you don't think it's going to be doing that. So like I said, 3 key ones that I'm watching today: Pfizer, AMD, Starbucks, but there's a whole load of others out there at the moment. Pick of the week though, I'm going to be looking for Apple earnings on Thursday. We had a good week last week for some of those big tech stocks. They put in a decent set of returns, and that sort of added, well, it felt like a bit of stability to the market. There's a lot of negatives going on where you'd think that the markets were going to pull off a bit, but actually those earnings did stabilize things. And like I say, another key one Thursday, Apple, so watch out for that one, and play it very carefully because it can be volatile. And taking on another set of charts that I like to look at every day, I trawl through the US stocks, and I find 3 that I like and 3 that I dislike, and I've put them together in a chart for you. At the top row is all the ones that are on my least loved list. We've got Coinbase on the top left. Now, where can we see them heading next? Well, we've got this move down in the price, broken through key Fibonacci area about $60. Got a bit of support around the 51 area. We could call this sort of a loose double top, and if again the rules of technical analysis play out, we could be looking at a real low sort of $29-30, which takes you back to the start of 2023. But it's going to break through this 46-47 area before it can start on moving down. Also, if you're looking at the crypto prices, it does track them quite closely. Bitcoin had been looking a bit stronger, but has also now started to, after it pipped through the 30,000 area, pulling back into the 28,000s, and again looking weak. So stocks like Marathon, those type of ones that are highly correlated to the crypto, especially Bitcoin, watch out for them. Use them as a guide to, use Bitcoin as a guide to where they're going to go next. And Coinbase looking pretty weak. Like I said, one of those unloved stocks at the moment. And in the middle there, Snapchat, the social media platform, huge amount of competition out there at the moment. It has, it's been doing okay. And I thought at one point, early start of the year, it was looking quite good, and then we had this sideways range. Didn't really want to get below $10. Then had the earnings coming out, and we had this sudden quite large pullback in the price, and we're talking down to the next Fibonacci level about $8.25, and then under that it goes a long way down to nearly 7, just under 7. Nice round number sitting there. Just pull the chart back, hasn't really gone down to those sort of numbers since October of last year. So look out for Snapchat, not looking too good. And finally, Datadog over there on the right hand corner. Again, performance over the last few months hasn't been that great, pulling down. Tight range in there, between 72.25 and $64. Looking for that breakout down to $60, and then under that it's down to $53 and $54. And moving on to ones that I sort of have more of an affinity with, and ones I've been tracking again quite closely. One of the popular favorite stocks of 2023 so far has been Nvidia, and it's been on a tear up really since the start of the year, and it doesn't look like it's stopping just yet. So you're going to ask, where could it head next? Well, if it can break these highs, which it's just pushing at the moment, it's up to the early $300. That's saying $329, $330. I like to use the Fibonacci trend charts to give me an idea of rough, sort of target areas for these sort of markets, and you'll see me using a lot of those on the charts. Polte Group, another interesting one, had a good recovery in 23. Let's have a look how much that's up over the year. That's up nearly 50%, so a really good performance there from the stock. And again, it's got that same shape to Nvidia. We're looking for it to break these highs. Next stop, $75, $76. So looking encouraging there. And the final one that I've picked on, Greco here, being flat in this tight sort of box range, not sort of going too far. And then earnings come out and it's popping up. But if I pulled that chart back a bit, we can actually see that, that it's been doing reasonably well. It's all been moving up into the range. And then we've had that burst out target-wise. I would say $84 to $86 for Greco there. So that's my pick of the stocks that I'd like to look at and find bullish, bearish opportunities in. I suppose another thing for this type of show is I love your feedback. So if there's markets and areas of the charts or different types of chart that you would like to look at, I'd love to hear from you, and I can build that into the show. The purpose of this show is to get you as much knowledge of what's going on the day and the rest of the week ahead, and then build that in with technical analysis and the other, I suppose, skill sets that I've picked up over the last few decades of doing this for a full-time job. So keep in touch with me there, and let's just have a look through some comments, see if we've got anything. Starbucks has been ripping it, says Tiny Pie Media. We've got some good mornings to you all as well. And just going back to pre-markets, any changes up there? Uber's still holding positive, around 8% up. That Arista is leading the day at 9% there. So what else is catching my eye at the moment? Well, I've been trading, I have a lot of trades on currently, and we're going to just have a quick look. Let's just see what Arista is doing. It's caught my eye, Arista, so we'll pull up a new chart. Let's have a look. Let's see what it's up to. Ticker ANET. Arista Networks. Sorry, when I say leading the way down, down 9%. Leading the way as in the biggest percentage move. You can see the pre-market down there. Let's just draw on those Fibonacci lines, see where it could be heading. It's been doing okay for most of this year, gone flat, like quite a lot of the markets at the moment. That sort of wedge pattern building. So yeah, it's sort of playing around that Fibonacci line, 147, 150. And then I think it's probably likely to, if it's still bearish, pull back into the 140 to 133 area and settle there. If it doesn't recover. We've also got Uber doing quite well before the bell. Let's have a quick look at those guys. And you can see the pre-market up there in yellow over there on the right. It's a big jump on upwards. And these are all daily charts, by the way. Again, just over here, it's going to end up somewhere in here price-wise, looking to push on towards those highs, $37, $38. And where can it go after that? If it still continues on upwards, then we're talking $43, $44. Interesting to see what Lyft, its rival, is doing at the moment. Some would put this together as a sort of a statistical arbitrage type trade. Lyft not doing quite so well, as you can see there. It's been down, really had a bit of bad earnings previously to this. You can see there, took the price down, a whole load, and then really hasn't gone anywhere since. So really, that's what's going on at the moment. It's been a quiet start to the day, mostly because of the UK, European, Chinese May Day holidays. They're all back, other than China, till Thursday, and it's just got to feel that everyone's waiting for the US Fed decision late tomorrow at UK time. Expecting that 0.25% raise. Like I said, hopefully that will be the last one we'll see, and then maybe a few reductions before the end of the year would be nice as well. But I think they're going to just play it very carefully and see what happens. There's a lot going on in the world at the moment, China, Russia, all those things, so plenty to consider when making those decisions. But really at the moment, a quiet start, but a lot of opportunities out there. We've seen a few stocks with earnings coming out, giving you hopefully some ideas on what to trade. And I think really that is about it. I think, Aaron, is it not for...
Yeah, no, it's 8 a.m. You did it. You perfect timing there, Stephen, wrapping up right on the dot. I see the only copy in the chat's asking about Ulta. The only copy, stick around. So this stream will automatically redirect you to pre-market prep, where Joel, Dennis, and Mitch will be going over some more charts. So make sure to ask for Ulta on the next stream. I'm sure they'll take a look at it. But Stephen, thanks again. I mean, this was awesome. Great way to start the morning. Great way to take a look at what was going on over the pond throughout the night while we were sleeping. So now, I mean, I feel way more primed, ready to go into the day after this. So thank you again. We'll have to do it again soon.
Yeah. Thank you very much. We'll sharpen up the analysis and hopefully bring on some guests as well that I've been talking to that might, give a different angle to me. I've got some interesting guys that I know from my days, so it'd be good to get them on and give their opinion on where they think stuff's going, different markets and industries, that sort of thing.
Beautiful. All right, Stephen. Well, enjoy the rest of your day. We'll chat soon. And thank you to everyone who tuned in
to the
inaugural episode of Early Morning Market Watch with the Stop Hunter. Please smash the like if you have not already, and stay tuned for pre-market prep.
Thank you very much. See you next time.